Absolutely is, Jeff. What is going on is that I think everybody's pretty clear on the end goal, the reduction of CO2 emissions. And I think the politicians and to some extent the apparatus behind them, the central banks and the treasuries around the world, has gotten in love with the idea that electric vehicles and temporary measures could actually solve the time between now and the future. Of course, the stark reality is that we have a mini energy crisis in case of Europe and to some extent Asia. We have a capacity issue. Storage is very low. As you say, supply is low. And we have LNG, electricity, and coal use is the highest ever. So clearly the policy has failed, not in its objective, but in its implementation. And that implementation will need, in our opinion, a reclassification of certainly nuclear, but probably also natural gas, which for the record in Asia is perceived to be a green energy, whereas, of course, in the Western world, we see that as a fossil energy source. So reclassification, but also a dire need for the policymakers to figure out that you can't just unplug fossil energy and then put in renewable energy due to all of the technical factors involved with such a move.
So as I look at number one, which is the plan to end fossil fuels gets a rain check, and number four, US inflation reaches above 15% on a wage price spiral, to me, these don't sound that outrageous, but they do suggest maybe I want to own some oil assets at this point. What is your current call on oil at Saxo Bank, Steen? Do you want to own the integrated oil companies, or what part of the chain is more interesting?
So what we want to own is the whole process of rolling out and renewing the whole grid network. So, the future will involve renewable energy, but it also needs to involve the old coal and oil company, integrated company, as you call them. So for us, it's pretty clear that unless you're under the ESG label and like most sovereign wealth funds is and a lot of pension fund as well, you should see a huge opportunity. I mean, you see it particularly in the mining sector this year. You've seen someone like Fortescue paying out and buying back more stocks from their profit than MasterCard and Visa is able to show to their actual shareholders. So I think that will also transpire into the oil industry next year. But of course, the overall headline, as you very well know, Jeff, will be whether you actually have the mandate to enter into these, which means the marginal cost of capital for the same sectors, mining and oil, will be very, very high. It's going to be very difficult even to get the boards to sign on because they are afraid that they're going to be sued either by the investors or by the public from what they do. And of course, regulation is coming fast and furious to close these companies down. So it's a big fight, but the reality is that and that's actually one of my actual calls for this winter, if there is a severe energy crisis during the winter, you will see policymakers change. And I think it's super interesting this morning that Japan now is announcing that not only do they want to slow down the renewable energy change, but they also want new investment into fossil energy. So governments around the world are changing, and they're changing very, very fast as this energy crisis bites.